trading at its best.
So once again, I'm Mike Swanson. Today we are going to be teaching how to avoid stop hunts. So this is something I've taught in the past, but I've got a different approach we're going to take today, and I've actually got a tool that I'm going to give you guys a link to download, a free tool that you can download today and start using, and it's going to help you avoid these stop hunts, okay? So first off, what we're going to be talking about here in a second is what is a stop hunt? For those of you that are new, you might not even know what a stop hunt is. Some of you might still be a little confused on that subject, so we're going to briefly explain that. And then I want to give you some information about market sentiment, the basics, what it is, how it works, and then a tool that gives you this information of market sentiment that you can use on any pair and gives you a lot of pure transparency to the market. And that trading tool is called the TWF Informer. TradeWest Informer. So I'll give you guys that link at the end, and let's go ahead and talk about what is a stop hunt. Okay, a stop hunt is a strategy used by big players to force traders out of their positions, and they do this by driving the price to a level where many traders have their stop loss. So this is why a lot of times when you put your stop loss just above candlestick support or below support or above resistance, that a lot of times the market will it seems to attract itself there, stops traders out, takes you out of your trade, and then goes back in the other direction, or just causes a lot of volatility in the market. So this is actually a strategy being used by not brokers. I mean, there are brokers that do this, but it's also by any big player in the market. When I used to manage accounts, I used this strategy. I would use this strategy to take other retail traders out of their trades. I've built robots that use this approach. I know that there's other robots out there that I can play against. So anybody can use this strategy, and what you're going to learn today, it gives you the ability to stop hunt as well. Of course, you're not going to be as successful as somebody with a large amount of money, but that's not our purpose. Today's training is how you can kind of ride the coattails of the guys that are stopping other traders out. So now that you know what that is, let's talk about market sentiment basics, because this is the information that you get, that you're going to get, that will tell you where those stop hunts are taking place or where they're potentially going to take place. Okay, and we're going to do this by using some information that comes from different brokers and banks. And there's actually some of these guys out there that will give you transparency to their order books. So you'll be able to see their limit orders, their stop orders that are actually on their books. And this gives you an idea where the market's going to find support and resistance. Real support and resistance, not the candles, or some indicator. This is actual volume, liquidity, real limit and stop orders in the market. You'll see what I mean when I show you the tool. But that's huge in knowing how the stop hunts are going to work. Okay, so if you know where the stop and limit orders are, you know where the market's naturally going to find support and resistance. Okay, so let's go ahead and one more thing here is I want you to also know you can use this information to find out where other traders are looking to buy and sell, right? If they're putting stop and limit orders in, that could also mean that they're looking to enter the market at these different levels. So not only will you be able to tell where stop outs on trades will take place, but you might find where real breakouts and strong breakouts in the market could take place. So you can put your own stop and limit orders in. Okay, so now that you got a little bit of an understanding of market sentiment, you know what a stop hunt is, let's go ahead, take a look at the tool, okay? So before you guys go download it, I'll come back to this link. Let me just go ahead and, we could probably keep this up while I show you guys, but let's go ahead and show you what the tool looks like and a little bit about how it works. Okay, so once you download it at that link, you will, it's a very easy installation. Click a few buttons, install it, it'll automatically launch and run. The tab that we're going to focus on is right here, the Market Sentiment tab. Okay, now what you can do is actually grab the corner, any one of these corners, and make this window larger so you can actually see this chart that's in front of you on the tool. Okay, once you have the tool up, you'll see that you have this black line. Okay, this black line moving along, that's price. Okay, if you look down over here to the left, you'll see this is I've got, what do I have, the euro yen. Okay, so you can see this is the euro yen price. Now, before you see any of this, though, you are going to have to go up and click on pair. You're going to need to select a pair. Select the pair that you want to view the market sentiment information on, and then you're going to need to set a period. Now, we don't have 15-minute or anything like that. That's not how this information works. You have day means the last 24 hours, week, look at the last week, month, the last month. So I'm on a day, and that's why I'm seeing about 24 hours of information here. And this updates about, I think it's every 30 minutes, this information updates. So now that I can see, I've got a chart in front of me here. Up in the top right corner, it's telling me that this is the buy orders. Okay, so all this green area you're seeing are buy orders. What that means is orders above the price, above this black line, those are buy stop orders. So those are not orders in the market yet. They are stop orders. So that could be somebody selling and they've got a stop loss above the price here. That acts as a buy stop order for their sell trade. Okay, and then when you see this green area below the price, those are buy limit orders. Those are traders that are looking to either take profit on a sell trade or enter long through a pending order. Okay, so all these orders you're seeing are pending orders from either stop and target prices or entries to get into the market. Now you'll see there's these little arrows on the left and the right. When you click this, it goes to the next chart. So here you have sell orders. Okay, so now let me explain what you're seeing here. All of this red area above price is a sell limit order. You're selling at a better price. So those could be targets for buy trades, or they could be entry, pending orders, pending limit orders to enter short. And everything below is a pending stop order to sell, whether that's a stop on a sell trade or on a buy trade, so a stop loss on a buy trade, or it could be a target on a sell trade. It doesn't really matter what type it is. We're mainly just concerned, where those levels are at and the amount of orders that there are. So then let me show you one more thing. When you click this button again, there is a cumulative or net, not the cumulative is the next one, a net of buy and sell. So most of the time I'm looking at the net because I want to see the total orders, the actual net. If the price goes there, what's the effect going to be? Okay, so you can see even though, if we went back to this chart, even though there are all these sell orders above the price, if I go to this chart, you'll see that it decreases because this is the net. Some of those buy orders are taking away a chunk of the sell order liquidity, right? So to keep this simple, now that you kind of got the idea of how the concept works, or I guess what everything looks like when you get it downloaded, let me show you how you use this information. So at the bottom, you'll see this little key showing you that really dark means there's a percentage. This is the percentage of orders at that level, and the darker green is the percentage of buy orders. The darker, the more orders there are. Okay, so on this example, on the net chart that we've got here, I could have looked at the chart at this time. We're going back in history now, as if if we were right here at this time, at this place in the market, we would say, okay, there's a lot of sell orders that if they're triggered, these are sell stop orders, so buyers, stop losses, or sell entries, that would cause the market to break further lower because they act as when those orders are filled, they put more pressure on the market to move lower until it finds the green areas, which are support. So this would have been a good area to sell. And obviously now with hindsight, we can see it worked out perfectly. the market came right into those orders. All that orange orders, those orange orders as well, triggered a big move down, all the way down until this green area formed. And what is that? That's support. Those are buy orders. Buy orders cause support. Sell orders above the price cause resistance. Okay? So sell orders below price are going to push it lower. Sell orders above price are going to cause resistance, as you can see right here. If we go further to the left, you see right here, let me get my little drawing tool out. Okay, all of this area that you see here was sell orders that were acting as resistance above the price. So that's why the market was struggling. It was fighting to get higher. This was strategy of big market players out there saying, we want to put pressure on the market. Maybe they have big sell orders from days ago. So they're putting in orders to put resistance on the market. This is what causes the market to naturally find support and resistance. So this is exactly what happened. They put in sell orders. It caused resistance all the way over till right here. Then the market was exhausted of attempting to push higher, so it fell down lower. It found these sell orders here. All this orange area is sell to push the market lower. It hit it. That fueled the move to the next level, which was really strong right here. It hit those orders and pushed all the way down and just kept going through. See, these orders were deleted, so they're no longer there. And there was no more support in the way until right here. Then traders started putting in buy orders to stop the move. So buy orders below the price are going to stop the move. That's exactly what happened here. And the market bounced up. And then the sell orders, nothing happened. It was, we have no man's land here for quite a while. It wasn't going anywhere. The support was building up really close, and that's what kept supporting the market. Eventually, the buyers were exhausted. Their orders were deleted or filled, and that gave room to push the market lower again. Okay, I'm going to change my color to red. Okay, so when there's no support, market's going to fall down lower. And then until right here. Now you see support again. Support, big time support building up from days, or for the whole day. If we went up to the weekly, you'd see it's been on there for probably several days or weeks. So that area was extremely strong, real support. So that's why the market halted right at that area, and it's been heading back up. So pretty cool information. That it's really cool to see this. Some of these banks and brokers being transparent and offering this, because obviously this is very helpful when you're making your analysis of where you should put your stops. If you're about to take a trade, you might hold off if you find there's some significant support or resistance that could affect your trade. Okay, so let's look at another example. Let's just go. Let's say we go to the pound yen. Okay, and let's bump it up to the week. Let's look at an entire week for a little bit longer term, bigger picture. I'm going to go all the way over to my net, and here I can see back here a couple days ago, the market had some very heavy sell orders sitting on the market, preventing the market from pushing higher. And do you see how the market took a big stab at those orders? A lot of momentum came in and hit those orders. And then that put a lot of pressure on the market to go back down. Now you have a lot of sellers that were getting filled, putting resistance on the market, and the price went back down. Okay. Here is an example where we had a ton of momentum that all of these buy orders, some of them started to delete their order. It became thin, and the market crashed right through that support. And then it found this secondary level, and that's where it stopped. And additional orders came into the market right after that, right here. So for example, here let me give you a strategy of how you could have traded this. Okay, when you see the market come down and hit into this really strong area, this long-term area of support, and this new area forming, this is where you can start to enter long at market, start to scale in. Okay, so right there is where you start to buy, knowing that you've got support down below to help help prevent the trade from breaking lower. If it does, your stop, for example, on this trade would be below those buy orders. You'd put a stop right down here. So that way, if the market did come down and dip into these buy orders, you would hope that more buy orders would come in and support the move and push it back up again, just like it did over here, right? So market came up, tested those buy or sell orders. If you were selling it anywhere in here, you would have put your stop up above in this area, up above these orders, and you would have prevented a stop run, a stop hunt. So now we're bringing it all together. This is how you avoid stop hunts. Is when you take a trade, you look and see where all the significant order flow is at, and the volume, liquidity, where the orders are at, and you put your stop up above where it's more thin, and it would have to get through all of that resistance of orders before it would stop you out. Okay, you don't want to be like the masses here. Do you see how everybody else, with all that dark area, shows where everybody else has their stops? They're putting them right above support and resistance, right above resistance. That's exactly where big players, like I told you earlier, have a strategy knowing this information. They're going to push prices up there and they're going to sell hard and get those, those orders are going to get filled, and they're going to sell hard and go down and head the market back down. So that's how you avoid it. You simply put your stops above all those orders where it's really thick, where there's a lot of liquidity sitting. And the same thing here. If you buy down here, you would put your stop loss below those buy orders, or maybe even below this even darker area down here. And then what you can do is scale in, like I taught you in a previous training, scale in if the market pulls down and hits these areas, buy in with these guys. Okay, kind of like over here when it came down and came close to testing there, you could add to your position right there, knowing that you've got buyers on your side if it goes lower. So I hope this makes sense for you. You might have to review this training, but this is extremely valuable information. It's very easy to use once you get the hang of it, get familiar with it. I suggest you download the tool. I'll bring that link back up. Download the tool, thumb through the different currency pairs that are available and the period, and you can do your own analysis. Spend a few hours just studying this information and how you can use it to benefit your strategy. And I know this will really help you tremendously avoid big problems with those stop hunts and premature stop outs on your trades. So let me go ahead and bring this link up once again. It's TradeWestForex.com/informer. Download that tool. If you need any help you have any questions or you need help with it, we've got a little feedback button right here, leave a suggestion button. Okay, so you can click this little button right here and leave some feedback. If you need help or if you have a question, leave some feedback and we can get back to you and help you with anything you need. And if you enjoyed this training, leave a comment on the blog, and I'm looking forward to teaching you guys more cool things just like this. I'd like to think that we're probably going to have a lot of positive feedback, just like we did on the simple trading strategy. We had somebody that the next day made 194 pips the day after the training. So I'm confident that if you guys download this tool, you'll have similar success. You'll find that you're not getting stopped out as often. You'll have a lot more success with your trades.